Chuck Butler, and you are tuning into, you guessed it, the Friday Recap, where I go over what I traded in the stock market for the past week, and I also go over what I did wrong or what I could have done better. Don't forget to smash that like button and subscribe only if you found informative value within this video. Let's go ahead and jump right into it. All right, so three tickers, two wins, one loss, up 3.2% for the week. I did not hit my percent goal of 5%, and let me show you why. This week I only traded UWT twice. This is a leveraged 3 times oil-based ETF, and its inverse is DWT, and it follows the Forge.cl future. So the reason why I traded UWT on Monday, let's go ahead and zoom right into it. Why would I trade something that's decently pre-market? Well, as you can see, it was following this trend line, but it broke the descending pattern about right here. And let me go ahead and show you as to why I took a position. When I'm day trading, I like to use only several. Let me find it. I only like to use several strategies, and one of my day trading strategies is to buy above the 9 and 15-day EMA cross, which it did right here, but I did not exactly buy at the EMA cross. I bought on a pullback at around 1401, as you can see, and I sold at around 1430. This white bubble right here, exactly why I wanted to sell, by the way. And the reason why I exited the trade is because it hit my price point that I wanted for about 2.07% on every trade. I would like at least 2%, but I will settle for 1% if I have to, and just growing the account small. I'm a very conservative trader, not as so aggressive as most. You'll find that different about me. And the reason why I did not stay in is because I just wanted to secure my profits, even though my plan is to not trade unless or to get out of the 9 to 15-day EMA cross only if it makes 3 consecutive red candles below, which it never did, and then just continued to trend up higher for the day. But I was happy with my profits, and I took it where I saw fit. So that's going to be it for that trade. Let's go ahead and zoom into Thursday, where I traded it again, same thing that happened on Monday, trending down pre-market, and then it spiked down intraday. I got in at around 1260 at this bubble right here, and I made my exit at about 1280 right here. And same strategy I used again. I got in at the 9 to 15-day EMA cross. Boom, bam, right here around 1260. And I could have sold at around 1289 for about 2% profit, but I saw that it was hitting the wall. But I believed that it could reach at least 13. So what I decided to do is set my stop loss at 1280 to secure at least 1.59% profit. And I just decided to work for the rest of the day on different things, and it stopped me out. And it stopped me out at around 245, I believe. Yeah. So yeah, what I could have done better on this trade is took profits a bit earlier where I saw fit. And yeah, that's gonna be it for this one as well. Okay, so let's go ahead and move on to the last ticker symbol TVIX. As you can see, I did enter this one at around 39.91, and I did make my exit at around 39.45. Reason as to why is because it hit my stop loss. That's where I had it set, and the total margin I lost on this trade was about 1.15%. So let's see why I got into this trade. The reason why I got in it is because I saw a pattern of higher highs and lower lows. As you can see right here, it's the trend line, higher high, bounced around this zone and the trend line, and then made it higher high. So the next pattern that I thought I was going to make is, hit the trend line or hit the zone and make a higher high. And it did shoot through the zone, but it did bounce back. What I should have done is I should have trusted my intuition and my technical analysis. I should have got in at around the zone, because if I did, I could have made out with about 2.45% at the top of the trade. but I did not do that. I got in a bit too early. I shouldn't have even taken this trade if I did not get the position that I wanted, because the overall margin for profit would have been so small, because I did get in with a small position, and I wasn't planning on adding to the trade unless it made a high above 41, which it never did. And as you can see, it trended back down, trended back up. I still held through that, and then it came back down finally after SPY right here. Let me go ahead and move to SPY. After SPY broke its descending trend line. And the reason why I'm comparing this to SPY is because it is a VIX and it plays against the SPY. So if you don't have a margin account to be able to short, then you could play TVIX in place of that shorting, because if SPY goes up, TVIX goes down, vice versa. So what I could have done better on this trade is trusted my intuition and got in at a better price. And I shouldn't have marketed the order. I should have been patient or not have gotten in the trade at all. And then I should have set my stop loss. No, I set my stop loss at a pretty good place. So yeah, I could have made out with at least 1% on the trade, which, that's my ultimate limit. But I was being just too greedy and I lost out. But for the last past 2 months, or this whole year, as you can say, I've been consistently profitable every week, and my my losses have not been more than 2%, which I am very proud of, and it shows improvement. So yeah, that's gonna be it for this Friday recap, and I will see you guys next week. Don't forget to comment down below if you have any questions as to what was going on in this video, or if you want to go over your week and how you could do better next week, or if you had any comments on how I traded, and if you can help me, let's go ahead and start a discussion. So yeah, I will be out.